Well, welcome back everyone. On the heels of last night's video where I hope you got a sense of how this market is operating, I'd like to build on that with what happened in markets today, especially with some negative comments from the Fed talking head, if you will, Timorous, and of course some comments that came in after the bond auction that tipped markets a little bit more negatively. Now, we've got a series of charts here, a few time frames. We've got a weekly time frame, a daily time frame, and a 4-hour time frame. Now, if you're thinking about a swing on a basis of 1, 2, 3, 4 weeks or longer, the weekly time frame is instrumental at giving us that backbone for the move. The daily time frame, a week or two out, and the 4-hour time frame, about 3 to 5 days out. So if you're going to put the pieces together here with what the signals tell us, well, we got a big distribution week bar last week. And you heard Rob say that we're probably going to be in a spot where we're going to have market chop. So you've seen that exactly in play for the majority of this week. And of course, the signal structure is what matters at this stage. On the weekly chart, we are still in a bullish market. And we've got a breakout forecaster that's been tested. The Champion Cross buy zone or green zone is still intact, and the second breakout forecaster is a potential area for prices to come down to. Now, our thesis on the week was that this week is going to have clearing out some of that negativity, chop, and then we build a base that could potentially push us higher. The latter part of that thesis has to confirm. It has not as of yet. Now, when you take a look at the daily chart, is it as bullishly configured, albeit the weekly is weakening, but it's still on a Champion Cross buy signal? It's still got the Champion Trend buy signal, and that's that line right back there that started well back. Well, it's still in a bullish configuration. Is the daily chart in a bullish configuration? Well, the answer is still yes. You've got the Champion Cross buy zone dot and blue dot right there. The zone is obviously thinning out. You've got the Champion Trend trailing buy line still intact, not gone away as of yet. And the backbone of the move is still intact. However, as you look at the Spike 2.0 tool, something that I can introduce a little further for you today, you're seeing the slow spike below the bottom of the channel. And the fast spike is trying its darndest to turn back up and get above the bottom of the channel. In this state, we would consider the market operating on high octane bearish fuel. And with the 4-hour chart in that spot as well, there may be still some downside risk in front of us ahead of the data and then through the data coming out first thing tomorrow morning. We get the PPI data, the Producer Price Index data, first thing tomorrow morning, and it may have a chance to include some of the rise in price in oil and throw the algorithms out there for a bit of a negative tizzy. However, the channel bottom on the daily chart and or perforating it and coming back up into it is really what's going to matter for this market move using our powerful technical tools. So if I can add to what we did yesterday in a video just like this, last night's video, a market move today that came with some IRB positive strategies on the daily, but still ended up with the 4-hour chart in a sell signal state, is a state of mixed signaling. The nearer term says, watch your back. The daily chart says, there is still support, we're not broken yet. And then the weekly chart says, we're not worried unless we're coming down below that second last breakout forecaster. So at this stage, I have to come in and say, the downside risk has to be quantified, and can the toolkit give us an idea of that? Well, yeah, that second breakout forecaster would be a decent line to look for a dip and bounce up off of. Now that does take us a little lower than the channel, but it's all about timing. Getting below and coming back up into the channel and closing perhaps in the upper half of the channel would be a sign that the market is not done this up move. And of course, looking at the 4-hour chart, coming down to that 443, 442-ish area would indeed be negative. But remember, we're using up the last bits of that high octane bearish fuel. We're already seeing that slow spike below the bottom of the channel. It typically does not reside there for very long. And all of this culminates in the insights that you heard from Rob at the very beginning of the week. We're probably going to be coming down into that channel and seeing some chop. Until the chop's done, it's short-term intraday strategies only. And folks got to see me trade again live in the active trader room today. And of course, short-term strategies is what we're employing with our powerful tools. Goal is for the market to be in a clear signal state that a bottom's in, or a clear signal state that the bottom is breaking. And at this moment in time, we've got a mixed signal state between the 4-hour and the daily. And of course, the backbone of the overall picture here, for those looking out in time, well, the weekly chart's still bullish, but the downside risk has to be expunged before a continuation higher can set in. I hope that there was some additional learning in tonight's video, building upon yesterday's video. And again, we're going to be back at it in the active trader room, live active trading, going through that PPI at 8:30 in the morning, and then joining with everyone in the room shortly thereafter. And I'm looking quite forward to ending the week strong with members in the active trader room. I hope you enjoyed it. Have a great rest of your day, and thank you for watching. Bye for now.